Welcome to Destination Business Freedom, hosted by Pat Mancuso. Join us as we explore success strategies and hacks from leading entrepreneurs, helping you bridge the gap between financial success and personal freedom. Your journey starts here.
Pat Mancuso here. I am very excited today as the host of the Destination Business Freedom podcast to have an amazing individual with us today. Not only is this someone that I've followed for a number of years, this is someone that I'm actually in a business relationship with. He's on my advisory board for my company and just truly contributing to the things that we're doing. My goal as part of the Destination Business Freedom is to help people close the gap between their finances and their freedom. And so today I'm going to introduce our guest in just a second. But before I do, I want to quickly give a sponsorship message for the Mancuso method. The Mancuso method is a proprietary system that we help small to medium-sized companies with where they're at right now to define that destination, that address, if you may. It might be their exit. It might be a succession plan. It might just simply be how to run their company on a daily basis without them. You can go to www.themancuso.com, take a free short assessment, and that will entitle you to schedule a call with Pat Mancuso. And in that call, if he doesn't deliver $10,000 worth of value, he'll write you a check on the spot for $500. That's www.themancuso.com. So today, I have an amazing individual with you. I get to spend once every other month with this individual who has done some amazing things. I'm going to read his bio in a second, but frankly, his bio doesn't do him justice. His name is Roland Frasier. He's an inventor, mentor, and business strategist with over 1,000 acquisitions and exits completed for himself and his clients. His current portfolio includes real estate, restaurant, business and home services, e-learning, e-commerce, franchise, SaaS businesses, and he has been a principal of 6 different Inc. fastest growing companies. Roland serves on the Stanford University Advisor Board of Global Projects and their Family Office Steering Committee, and his work has been featured in Business Insider, Fast Company, Forbes, Entrepreneur, and Yahoo Finance. Roland has also interviewed Sir Richard Branson, Sara Blakely, Arnold Schwarzenegger, Martha Stuart, Magic Johnson, and other business celebrities on his award-winning Business Lunch podcast. He is also the author with Jay Abram of this amazing book. If you haven't gotten it yet, you need to pick it up, Business Wealth Without Risk. Roland, welcome to the show.
Thanks, Pat. Glad to be here.
Oh my gosh, you're just going to do some amazing contributions today to our audience. And so, first, in full transparency, I'm a part of your Epic group, and I know we're going to talk a little bit about that and how that helps businesses grow through acquisition versus startups. But let's start with, I know you're as you say, the recovering attorney. You've used that phrase a number of times. How did you get started in the entrepreneurial world?
I started really what I would say my business life as a real estate agent when I was 18. I took the exam and got licensed, and I sold real estate, realized that I really wanted not to be knocking on doors trying to get listings and find deals onesie twosie. So where could I find a bunch at one time? So I started working with real estate developers because they were constantly needing somebody to help them sell the houses that they had, and good centers of influence. And then as I learned kind of how they were running their businesses and where they were getting funding from, a lot of them were raising money through syndications of limited partnerships. And I asked, hey, how can I help with that? I realized they bought key person insurance. So I got an insurance license to be able to sell them key person insurance for each of the deals that they did and earn a commission that way. And then I asked them how they went about raising money, and they said they talked to investors, and I found out I had to get a license to do that. So at the time, they didn't license it where I lived in Virginia. You had to go up to Washington, D.C. to get licensed to sell securities. And so I went up there. So I did basically real estate license at 18, 19, I got my insurance license, 20, I got my securities license. And then I was in school at that point for an accounting degree. got my accounting degree. But through my securities license, I hung it through a firm in New York. I met some people at Prudential Securities and ended up learning all about leverage buyouts and got involved in doing leverage buyouts, but then started thinking, what if I could apply the things I learned through real estate, where you can just do all this creative financing, to buying businesses, but also applying some of the things I learned from leverage buyouts. So I started buying and selling businesses, and just really never looked back. I did that as I was finishing my accounting degree and going to law school. It's just been so much fun to get to blend all the things I learned from all of those really early days for me over the last roughly 40 years of doing deals. And so that's kind of the journey to date.
So you're in this journey, and ironically, I don't know that we ever talked about this, maybe a little bit, but my background was real estate, started in real estate, then have an accounting background, and didn't go through the securities world, but have started up a number of companies. And so it's interesting to see that correlation. And I think, that background, I'm assuming for you, that rounded background has been really beneficial in not just one industry from acquisition, but many others.
I can't tell you how many times in a week I draw on something from any of those prior lives. It's very, very helpful.
Yeah. So let me ask you this. I know you're in business with Ryan Dyson. We had the opportunity to have Ryan on our podcast here a little while ago. I don't think that episode is out yet, but it is coming. In your journey as a business owner, so you've, started, launched, bought into, acquired, exited many businesses. What have you experienced has been your biggest challenge in that journey, if you may?
Finding the right qualified people to operate the businesses.
And when did you discover that?
From the very first business I ever had.
I kind of knew that was the answer, but I wanted to pull it out of you.
Yeah.
And so by the way, that's so common. And in our consulting business, we actually have a proprietary process, organizational development tool, and behavioral assessment tool. And every individual I've ever had on any of the podcasts I've done, that is a very common theme. Why do you think that is? Why do you think that's so common for businesses?
Well, I think it's a few things. I think that, number one, I don't think that the pool of accomplished operators is nearly as big as the pool of businesses that need good operators. The second thing is I think that there's a lot of accidental entrepreneurs that are competent at a technical skill, at the thing that is being sold by the business, either making it or providing the service that's provided, whether it's baking pies or manufacturing a custom automobile. They're good at that, but
right.
They're not educated or skilled or experienced in how to run a business. And business operational skills are significantly different and require a pretty wide variety of knowledge and skills to be able to be good at. So I'd say that's part of it. I think also that the communications skills of entrepreneurs as visionaries and operators as more implementers, and that the visionary is more big picture, and this is what I want to do and make that happen. And then the operator who is, okay, give me the plan and I'll implement or execute the plan, that there's a little bit of a gap between translating there, that even a good operator can be ruined by a great, brilliant founder that just can't communicate the things that they want to translate into this is how you do. So I think that what's truly rare is not necessarily the person that can manage people or the person that can think of products or services. It's the ability for those two to get connected in a way that allows them to work together to execute efficiently and effectively on the vision that the entrepreneur creator has.
And that makes a lot of sense, right? It's being able to communicate that and then lead others through that through that journey. So, as a business owner, entrepreneur, what's been the biggest surprise for you in that journey, for you personally?
The biggest surprise, probably that everything, it's very, very seldom that everything just goes right for any length of time. That they're like on all fronts, that you may have this wildly successful product, but now you don't have enough money to buy the materials to create the product, or you have the materials and the product and the demand is there, but you're having trouble with shipping or fulfillment, or you can't get the supplies that you need. I mean, it's like there's this hydra of issues and challenges that's ever present in every business, right? And there's just always something that needs attention, so that business is much harder than I ever imagined it would be when I first got started. And therein lies some of the reward and the challenge. But I can tell you, because we're going through that in a couple businesses right now, that sometimes you're just like, you know what? I'd really like it just to be easy for a minute,
Just like a normal day without any drama, without any
surprises. The surprise is how many surprises there are.
Yeah, absolutely. So then let me ask you this: as an entrepreneur, as a business owner, your biggest success and what do you think contributed to that? Like you've had a number of successes, and we're going to delve into those. But what do you think is your biggest success so far, and what do you think contributed to that?
I've had a lot of really big successes, so I really, it would be impossible to say there was this one that blew me away. But what I continually believe is my success is also one of my biggest frustrations, which is every year I feel like I know and learn so much more than I knew or learned the year before. And I have so many more insights. And it's frustrating because it's like, why didn't I have those? This is like, I should know this, but it's not through making a mistake. I make plenty, but it's not like that doesn't come from making a mistake as much as that I discover these new pockets of experience and knowledge and efficiency and effectiveness shortcuts that I didn't know before. And they're all out there. It's kind of like in the medical world that you can have a condition and go to a doctor and 50 specialists, and unless you happen to hit the one that's aware of the kind of one weird thing that you are dealing with, you're never going to get the right diagnosis or prognosis, right? You're never going to get this is the prescriptive way that we go about fixing that. And so it's frustrating and exciting to see how much I know now that I didn't know even just a year or even 6 months ago, let alone a decade or two. But it's also like, why can't I find all that stuff? Like why don't I know that? It's because I'm not a passive learner. I'm very aggressively trying to know all I can and experience all I can. But I guess that's just part of the journey of life. So the success truly is that I'm not working with the knowledge and skills that I had 30 years ago to solve the problems of today. But a lot of businesses are. A lot of businesses are. I read something that less than 10% of the population reads a book after they graduate from high school. And given all the changes that happen, and I don't know how much books are supplanted by videos or AI or whatever, but to me, you've got to be, you're going to be the best version of yourself if you're constantly self-educating, if you're constantly working with smart people like yourself, if you're constantly surrounding yourself with people that are big thinkers and big doers, and you are consuming from all of the media types that are out there, not just one, because, books are awesome because so much thought goes into compressing a vast array of knowledge, like a lifetime in a book, that doesn't go into, let me create a TikTok video. Not to say that I just saw something and learned something cool from TikTok, and it was, something that somebody just happened to share for a minute, or a Twitter post, right? I can learn tremendous amounts from a tweet stream, I guess is an X stream now, or or a Twitter video, or a YouTube short, or a YouTube long. But there's not nearly the thought that goes into that goes into a book. So I still really believe books for like consolidated knowledge, but probably 6 months to a year old, because it takes that long to go through the process. And then books to really understand and get the minds of great business people in your mind, to think like they think. But then also short-term media, social media, and then AI. I have conversations with AI every morning, almost like a business coach. It's like I'm asking it what it thinks about this or that, and I learn from that. It's so that's a very long answer to your question, so I'll stop. But it's surprising to me how much you can learn, and the success, I believe, is in the evolution of yourself from where you were to where you are.
So I love, by the way, that the long-winded or otherwise, it was a great answer, and it leads me to a question. And I know the answer is probably going to be a good sized number, but how much time on a daily basis do you consider yourself to be in that learning mode? I mean, you might say all day, but just like even the AI example, like where you're focused on learning.
Probably 2 or 3 hours a day.
Yeah.
Usually early morning, especially, because I get up really early. So from maybe 4 to 7, 4:30 to 7:30, I can get a very, very compressed time period where I can get a tremendous amount done. And then in the late afternoon, same thing. I that, and then late at night. So like I have 3 kind of periods of alone time where I really get to focus and do things like that.
And let me ask you this question. I think I already know the answer because I get to experience it and benefit it. A lot of AI learning right now. Are you spending a lot of time in that area?
Yeah, I would say it, like, so we're about a year and a half in, I think, at this point, from when ChatGPT first got released. And so I would say that my learning about it is much less now than it was initially, because it's not evolving as fast as, like for that first year, it was insane.
Right.
Now, ChatGPT just this morning announced, 4.0, not 4.0, but 40. I don't know what it is, but they just announced that, but that's a kind of an iterative evolutionary thing. It's like, well, it's twice as fast and it costs half as much. Okay, cool. But that's kind of like the next Apple computer. Like Apple just announced, as we're recording this, their iPads, I think a day or so ago. And I'm looking at the price of it and I'm like, $2,800 for an iPad. I think I'll keep my one that was last generation, right?
Exactly.
Even though it's, 50% faster and thinner and has a, it's like, well, it still does what I need it to do. It just does it maybe faster. I feel like that's a lot of what's happening with AI right now. There are still really cool innovations. There's, 3 in the last month that we're really enjoying, but it doesn't take much time to find out about those. I track a lot of it. But it's just, so I'd say that I work with it fairly constantly.
Right.
Learning new things about it it just doesn't take much to keep up with it at this point.
Sure. Okay, so I have one last question and then we're going to transition. So, I always ask people who their mentors are, and sometimes people think mentors have to be, face-to-face relationships, and I don't look at it that way. I look at it, you mentioned books and, podcasts people could be mentoring through and never even actually met the individual. But who are some of your mentors that have truly had an impact on your growth and your journey?
Yeah, there are really four categories of it. The first one would be my business partners, the people that I surround myself with and that I do business with. I learn from every single day. That's why they make good business partners, and they are excellent in areas that I am less excellent in. And so I think that partner contract or hire your weaknesses is a really, really good. I think the first time I heard it was from Sara Blakely, and I really, really like that and believe it. So my mentors, definitely the first set, because it's so constant, would be the people that I work with. The second would be the people who I teach, the people who are in our masterminds, who are in our programs, because if you really want to master something, go try to teach it to people, because they'll ask you questions from 50 different angles that you never, ever even thought of. And the insights that you get from that, just by listening to yourself respond to the questions kind of as they go, you're always in a state of thoughtfulness about the things that you're doing. So that would be the second category. The third category would be, I would say, would be what I would call the great masters. So everything from and it's from media, from books or videos or whatever, but being able to watch Steve Jobs' thoughts on something, or Warren Buffett's graduation speech, or Charlie Munger's on video, or read all of their books and autobiographies or biographies about them. John Rockefeller, reading his way he thought about things, or Henry Ford and how he was sourcing multiple types of supply and how he was thinking about that. I love getting that primary. I think that's part of what people miss out on in our culture a lot these days, that they accept the news that's regurgitated from them, that the provider of that news or information got from somebody else, who heard from somebody else, who read something that was written by somebody that maybe interviewed the person. I want to go all the way back every single time to primary source material. And so my mentors are all of the primary source material that I can find about anything that in any way interests me or impacts my business. And then the last and fourth would be my father. I really, I got a lot from him in terms of how I think about business, growing up with someone who was a tax attorney, who had an endless stream of entrepreneurs coming in to his business who were successful enough to have tax trouble and, or need tax planning. And I would just see, like, it let me know really early on. I see these people come in, and in my father's office, there were all attorneys, and they all had on suits and everything. And these people would come in, and they'd be wearing cowboy boots and a leather jacket, or, jeans and, a flannel shirt or whatever. And I'm like, who are these people? And then, I meet them through the social life when I was a kid, and then through working at his firm when I was an intern and stuff like that. And I just was like, I want to be like those guys. Yeah. I don't want to have to wear the suit and be in an office with fluorescent lights and a desk. I want to be out in the field doing what I want, making stuff happen. And these were real estate developers and, software programmers and, people that own retail stores. And so I got to just see that you can kind of make money doing anything you want out in the world.
Right.
If you do it well and create value for people. And then being able to hear his thoughts about what they were doing and where they were having challenges, and then watch him as an investor, watch him lose everything, and then deal with that. I really got a tremendous amount from that entire experience that was invaluable.
Yeah. Well, and that's also something that I've experienced is very common, is whether it was dad, mom, father-in-law, mother-in-law, there was always somebody early in that entrepreneurial journey that had an impact on entrepreneurs today. It's a pretty common thing. So I want to shift gears because the exciting part for me is, I've been following you for, 4 or 5 years, and I get invited to an event, an online event, and I join, and then I come to San Diego for a live event, and I literally go all in. And the reason I went all in, Roland, was because you struck a chord with me in that, you can grow through building organically, and yet you can grow through acquisitions and build wealth truly through acquisitions. But what struck me was how in the conversation and what you've built, literally has allowed me to negotiate a deal for a regional development of a franchise that we're going to be building out. And I wouldn't have probably been able to negotiate the deal the way that I did without being a part of your group. And so let's talk about Epic. How did Epic get started?
Epic got started, my experience working with the companies that I mentioned, like the folks at Prudential and the real estate, and kind of having that as my first view into that you can acquire businesses and use the assets and income of the business to pay for itself, that leverage buyout strategy that was being run in the late 1980s. That would be the seed for it, I would say. And then the thought that I don't really know when it came to me, it was in the late 80s, but about applying the creative financing strategies from real estate to business and marrying those. So I did that for years and helped people do that as an attorney when I was practicing, doing it for my own account as well. And I called it equity deals. I would talk to people about that, and people would come to me with their legal or business challenges, and I would say, I'd love to, I can help you with that. You can pay me a fee, but what I'd really rather do is, let me help you with it and take a piece of the deal.
Right.
And so I just lived that life for years, and about 11 years or about 12 years ago, I guess, I was not yet business partners with Ryan Deiss, but I was kind of in his world. I joined his mastermind called the War Room, and I decided that I wanted to kind of share that with folks. And so we ran a program called the EIN, which was I think it was the Entrepreneur Investor Network or something like that. And I kind of like created a program, and we released it and used it to generate some deal flow and stuff. But got busy with the deals and kind of working behind the scenes, and didn't really pursue it much after that. Then about 2017, I was like, you know what? I had been very behind the scenes in lots of businesses for a long period of time, and I was like, I want to share what I know. And I also feel like I need to develop a personal brand because that I saw the value of that. I saw the value of the business partners I had, that, commanding a list and having followers and people that you can share information with is a good thing. The ability to get your ideas out is a good thing. And the ability to not be dependent on the brands, on the personal brands of the other people you're with. Because I was with two partners at the time, Perry Belcher and Ryan Deiss, and both of them had big personal brands. And I had invested in their company. And I remember having a meeting at my house in San Diego, and they were kind of having a disagreement because occasionally they would butt heads. And they were both saying, and I had just come in, with a 7-figure investment, and not out of pocket, of course, and as a partner with them. And they were having this, argument, and then basically each of them said, well, I'll just take my brand and I'll go and I'll do my own thing. And I'm thinking, well, thanks, guys. So I put my money in, and I'm kind of screwed because you can leave these companies and go do your own thing because you've got portable brands, personal portable brands. And that was like, ding, ding, ding. I better, if I'm going to be smart and not be at the whims of all the people that I'm in business with. And I say that not in disrespect, because they're both brilliant.
Dependent. You're dependent upon
Yes.
something else that you don't control.
100%. So I was like, okay, I got to do this. So I made it a point. I had thought for a couple of years about it, but I was like, I got to do a podcast and do this, but I never could. I'd buy all the podcast stuff and it would sit in the corner and then it'd be out of date and I'd give it away and then I'd do it again, And I was like, I'm going to do a podcast and I'm going to do an event and I've got to create content also. So these three things I was going to do. So I was like, okay, I can talk to all the people I know and ask them if I can interview them. And I'm just going to launch this podcast. And so I talked to Ryan and Perry and Frank Kern and I think Brendan Burchard and Dean Gracias, just people that I knew, to get 10 of these in the can. And I was like, now I'm going to do it. And I've got it once a week. I'm going to have to do it. And I think we're in the 400s now, right, of episodes. And whatever happens, even if I just have to talk, I'm going to do that. And then for my content, like I was like, I'm going to do Facebook was the first channel I wanted to focus on. So I want to do Facebook and I want to get 1 million people following me on Facebook. So I just started recording content with my iPhone at lunch, because I pretty much always am talking to business people at lunch. And my wife was like, well, you should call your podcast Business Lunch. You're always having lunch at business. I was like, that's a great idea. So I did that. And then for the content part of like Facebook and stuff, I just, if you and I have lunch and we talk about a couple of cool things, I just say at the end of it, I'd be taking notes about the 2 or 3 cool things we talked about and say, hey, Pat, do you mind, I'm doing this crazy content thing. If I just give you the phone, you point it at me, I make an introduction, I'll grab it, turn it around, point it to you, and ask you to go over these 3 things we talked about. And people were like, yeah. So I started posting that. It took me about 8 months. And I think I spent it was either between $20,000 and $40,000 to get 1 million people on Facebook by ad targeting, spending $10 a day on each video that I would do for, I think, 5 or 10 days. So it was $50 to $100 a video. And that got me enough people to then do a post saying, okay, I'm going to do an event. And I did it in Las Vegas. And it was the week that the guy climbed up in the tower and shot a bunch of people out of his window at a thing. So I fly into Vegas. I don't know if anybody's going to show up. My post was like, there was no paid advertising for that. It was just a video on my Facebook group page, and I'm assuming my Facebook page. And I said, I'm going to do this event in Las Vegas. It's limited to 15 or 18 people. I forget how many it was. And it ended up being 18, but it's limited to 15 people, let's say. And it's, I wanted to price it. I wanted people to pay to come, not to do it for free. So they saw the value. So I Googled masterminds, like what were the most successful masterminds in history? Because I wanted to tie it to a year, but I wanted the year to be close to 2000. Like I wanted it to be $2,000. And it turned out I think it was 1862, Andrew Carnegie started the steel mill masterminds. And so I was like, okay, $1,862. That's what I'm going to charge. And I did it. I sold it out in an hour, and then did 4 more, like scheduled immediately 4 more of them so I could help everybody that wanted to come. And got a room that I rented at I think it was the Mandarin Oriental. I got a boardroom that cost me $2,000 for the boardroom that sat the 18 people. And all but one showed up to that first meeting. And then I had no interest from Ryan or Perry in that until I did it. And then I'm like, okay, I'm going to Vegas. And then both of them are like, oh, well, I'll come. Which I was like, that's really cool because it makes it better for me. And for my content, I just took all of the presentations that I had done at any events over the 5 years prior and took the best things that people came up after the event were like, oh my God, this was great. I was like, I just want it to be all the best stuff. And I created that 2-day event. And then Ryan did some presentations and Perry did some presentations. And then we're at dinner and I told them, I was like, I want to sell something because, we have people here and they've invested and, where's the next place to take them to help them? And Ryan, we went through a bunch of different ideas, and then Ryan finally said, "Well, sell them, but we already have War Room. We already have this mastermind, and it's I don't remember what it was at the time. I think it was 40,000." And so I said, that's perfect because we don't have to do anything new. So I offered the second day. I said, hey, if you guys, and then we had a $100,000 thing where people could, we would help them with their business basically.
Right.
And we got, I think, 3% of their business. So I offered it, and we sold 4 of the $40,000 masterminds, and we sold 4 of the $100,000 things. And I was like, this is great to 18 people. I was like, this is crazy.
Pretty good percentages.
Yeah. And I'm like, yeah, but that's not going to happen again. And then it did happen pretty much exactly like that in different combinations at the next 3. So I was like, okay, this is a thing. I want to continue doing these events. I want to continue doing the content, and I want to continue doing the podcast. So in 2019? It was, maybe it was 2020. But right when the pandemic happened. So I was doing these events in different places. I did them in London. I've always wanted to do events overseas. I'm like, I want a presence in London. So I did 2 in London. Same thing happened, right? Great. So I'm going to say I maybe did 50 or 60 of those events like that, little small events. And then the pandemic hit, and I had to actually send the people home. They had flown into San Diego to do one. And I was like, I felt really bad, but the hotel was closed and the governor closed everything. And he was like, you gotta, you can't do it. So I was like, okay, well, I'll do a Zoom of it. And I was putting the stuff together for the Zoom, and I had just come back from Las Vegas. It was the last thing that I did before the world shut down. And another friend of mine, Pete Vargas, told me, he said, listen, you're in Vegas, I'm in Vegas, and I've got this guy I want you to meet. I've been doing stuff with. His name is Pedro Adeo. He and I have been doing these challenges. We won Tony Robbins's big #1 affiliate thing for a $40 million launch he did. And we're doing all this other stuff with challenges. I want to come and show you this, let you meet him. He wants to join War Room and also do challenges. Well, when I travel, usually I rent a room that has that's a suite that has another, like a conference table. And when I check in, even if there's no plan for it, I'll get a whiteboard sent up to the room with the ability to just in case, there's a chance to do something in strategy, or even if I think of something, I like the tactility of that. So they came by, and Ryan Dice was with me. We were meeting with Infusionsoft, and Ryan was there, and I had just hired another gentleman to help me with the business of doing those events. And Pedro came in and broke down his challenge thing, and I was like, I wasn't really paying attention. I was sitting on the couch because I told Ryan, and I was like, you should probably do this for digital marketer. And then I'm just kind of doing my thing, but I'm kind of listening, and I'm like, that doesn't sound that hard. It's like, it's pretty simple to do. So the guy that I had hired as a marketing director, and I said, look, I want to do a challenge. And he said, okay, what do you want to do it with? I said, I want to do it with all this stuff because I've just put it all together. Basically, do a challenge that teaches what I taught in the events, and then leads to come to the more full version of it. I didn't have anything built, by the way. And he said, okay, when do you want to do it? And I said, how about Thursday? And he's like, Thursday? And I said, yeah. I said, why? That's when we're supposed to start the ads. Let's start the ads the next Thursday that comes. And do it the following Thursday, because you're supposed to do it for a week, and then you do the challenge. I didn't have anything built for it. Nothing. And he and I were brainstorming, and we came up with, because there was the pandemic, ethical profits in crisis. I wanted something that talked about ethical, because I want people to know that you're not trying to take advantage of anybody, and that you really want to be doing the right thing. It's a very core value for me. Profits, I want people to make money. And at the time, in crisis, I think now we'd probably change it to in commerce. But so Epic was that, and that's how it came about. And then from that same process of well, what are we going to sell? Let's sell a mastermind where we help people do this, like coaching mastermind kind of thing. And we sold I think we sold programs before we sold the mastermind. So we actually did. We sold, I talked to Ryan Dice about it and I said, what should we price this at? And he's like, $500. I'm like, it's not enough. I don't like that. I don't like those cheap things. Like, well, I'm always underpricing, but then you could sell a lot of money, but I don't think I could sell 4 times as many at 500 as I could sell at 2,000. So I ended up doing it. I think I did 2,000 and 3,500. And then I price tested up to, I think we ended up at 5,000 and 7,900, like 4,979. And, we did that, and it was a paid challenge. It cost $55 to take for a few years until the market kind of changed, and then we moved it to a free model because everybody kept telling me that they were doing free challenges and were able to get a lot more people in. And ultimately, even though you have to go out of pocket on the ad cost on the front end, you still end up making more because you get more people. But that's really how Epic came about, and just evolved into adding a mastermind and coaching program, and then other programs on how to raise capital and how to consult for equity and how to exit your business and things like that. Enough things that there are way more things that we have product wise than we have marketing people to be able to sell. So we have a lot of things that are just kind of sitting on the shelf that nobody really knows about because we don't have the team to do it. Back to that whole operator challenge.
Well, so it's funny that you say that because you've got so much content. I mean, there's so many things and there's so many different pieces that people can take away and apply for wherever they're at in that process. That's been my experience.
Yep.
I've got a pretty broad background, so I might start at a different point than others have. I've started from ground up. I've exited. Success, failures, you name it, the whole journey. And yet, what I love about the program is that I can, plug and play at any time. Everything's recorded, everything is there, everybody is accessible. When we come to the live events, it's a sharing environment, it's a transparent environment, and yet every time I come, I learn something, I take something away from it. So let me ask you this in terms of business acquisitions. I mean, you said, you might change it to crisis, and I actually think you should keep it as, or to commerce. I actually think you should keep it as crisis because I think crisis is coming for a lot of businesses for a number of reasons.
I think you're right.
In the acquisition space, what are the kind of the big mindset things people have to overcome around that? I think one of them is probably capital. Like, somebody wants $2 million for their business. I don't have $2 million. But what are the top 2 or 3 strategies that you see that you can open up people's minds to look at that acquisition differently?
Great question. I think that the first one is, just an awareness that it's possible. That they didn't think, the person who has worked for somebody for 3, 5, 10, 20 years as an employee doesn't think that they can be a business owner. And there are lots of reasons for that. Like, they don't think they're qualified, they don't think they have the capital, they don't they don't even know that it's possible. So I think that creating an awareness of a problem of you're trading dollars for hours and you're not able to build transferable wealth when you're an employee. You have an expiration date on your ability to be productive and make income if you are tied to the labor of your mind or your body. And so I think an awareness that that is a problem, like even thinking about that's a problem is something people need to come to grips with. Then let's say that they become problem aware. Now they're not solution aware. Well, what do I do about it? I need to flip real estate, or I need to, trade stocks or buy Forex, or, get 6 jobs. I don't know. What do I do? For me, then it just becomes, what do you enjoy? Because if you don't do something you'll enjoy, you'll find reasons to sabotage consciously or subconsciously what you're doing. If you are like, I need to flip houses or become a landlord, and you hate that, like I do, then you're not, even if you're doing well at it, you're going to blow it up somehow. So I think that like scanning the universe of potential options of what can I do to escape dollars for hours, and I'm going to talk about a few things. So bear with me. I'll get to it. That's the first place is, well, okay, so now what are my options? Now, let's say that I look at all of those and many of those are fine. I just believe that acquiring positive cash flow streams that already exist is way easier because it can be passive. Most of those other things aren't. Even rental real estate flipping is a business. It's a job.
Right.
Forex trading is a job. Day trading is a job. Stock investing is a job if that's what you're doing to trade your way to a living. And certainly operating a business is a job too. So then I'm going to look at all those options and say, are any of those or could any of those be truly passive? Well, receiving dividends from the stocks that you bought and hold on to, a la Warren Buffett, and get the capital gains, that's not a full-time job. That works as passive. Investing in bonds or, something where I'm going to get paid interest and I'm going to do it again long-term. I do it once and then I don't have to really worry about it. That's passive. Real estate, buying something, not fixing it up and flipping it, but buying something, owning it, and then creating a real estate portfolio that someone else manages for you, also passive. And then owning a business as a business owner, I think, is passive too when you're not the operator. So now we're down to really like maybe 4 or 5 possible things. And then I think you pick the thing that you like of those, but be focused that it's passive, not a job, right? Now let's assume that the one that you picked is business. Now you're either in business or you're deciding that you want to acquire a business so that you can be in business. If you're in business, you can grow your business by expanding it rather than working harder in your business. Acquire other businesses that are related to your business and help prop it up and increase its value in some way without increasing the hours you have to work. That's a viable strategy. And acquire your first business because you don't yet have one and you want to move from dollars per hours to something, but acquire it as an investor in the business, meaning find a business that already has an operator or that you can put an operator in so that you are truly the investor receiving the dividends and distributions, not an owner, operator, self-employed person who's basically bought yourself a job. That's like the first kind of set of things I think to deal with. Then it's going to be, okay, well, what do I buy?
Right.
You have to know what you want in order to find the right business and know what to say no to. So that comes down to creating your acquisition criteria. Your acquisition criteria are usually something along the lines of, I like doing this kind of stuff, or I think I'd like owning a business that does this kind of stuff. And I need it to generate this much profit. And I want it to be in this particular location. Is usually like, if you have those 3 things, that's a good starting set of acquisition criteria. You can get more specific as you learn more about how many people do you want to be employed or how long do you want it to be in business and stuff like that. But that's kind of the next challenge set that people look at. And then if you get both of those things in place, the next thing is usually, well, how do I pay for it? Because they want, I love this in our business, and you hear it all the time too. Well, the seller wants cash. Like, of course they do. Me too, but we don't always get what we want, Yeah. So the sellers that want cash that have someone that will give it to them are not generally the market that I like to go after because I am very risk averse. I think that once you build a certain level of wealth, you find that pretty much everybody, every family office, every major successful investor thinks about wealth preservation over everything else. Don't lose what you made because it takes so much to get it back. Be risk aware, so I am risk aware and I'm risk averse because I find that there are deals that are out there that I don't have to put capital in. Now, you can put capital into deals. You can go and say, I've got savings of this much or an IRA or whatever. I'm going to tap this, or I'm going to get my friends and family or a home equity loan or whatever, and I'm going to buy this million business that's making $300,000 a year, and I have to put down, 100,000, 10%, and I'll get the SBA to finance the balance of it, let's say, right? So that's a very traditional deal. You've got equity, you've got, a governmentally guaranteed bank loan, effectively, if you're in the United States, to cover the difference. And maybe the $900,000 loan that you got costs you, 90, let's say it costs you $100,000 a year, right? I think that's roughly 12% interest. So cool. Now you're paying $120,000 a year for a business that's making $330,000. You're doing okay. You're making $210,000 a year profit on your $100,000 that you took out on your house. You pay that back 1 year later. You still got $100 and some thousand in your pocket. And after that, it's even more, right? And maybe you grow that and, God forbid you sell it at some point. That's really not that hard. But what if you don't have or don't want to risk that 100K, or you don't want to get that loan out on your house or whatever? Then are there other strategies? Yes, there's several hundred of them to fund that deal. So what are those, right? And then it's, well, I don't know how to be sure I don't get taken advantage of. That's easy. Hire an attorney and accountant. I don't know how to operate and grow the business. That's have the operator and buy a business that's already growing, not a startup, one that's proven, one that's got a track record of several years of profit, and somebody that's running it, and you should be good to go.
Yeah. Yeah. And you introduced me to the concept of taking my world of consulting and adding just a phrase for equity. And so I know this has been an amazing time, but I do want to just have you talk about that just for a couple of minutes, because I really don't think a lot of people understand that is a strategy for wealth acquisition and wealth creation.
Yeah. So one of the coolest things that you can do to instantly transform the dollars for hours dilemma that anybody has who is trading their knowledge or their labor for money. That includes everyone who's a consultant, but also everyone who's an operator.
Right.
Rather than being paid a fee for doing that, and fees come in many different types. They come in, I'm going to pay you this much cash. They come in, I'll pay you a bonus of this much if you achieve these results, which is a performance-based thing. And it can even be a revenue share or a profit share where they say, when you implement this thing in my business, I'll pay you X percent of the revenue or profits from that as long as I'm using that thing, right? But none of that builds lasting wealth. So rather than trading away your very valuable stuff to increase the value of the business that you are providing it to, instead of letting your genius become somebody else's retirement, or your labor become somebody else's retirement, trade that for equity. And so the concept is really simple. The details, are a bit more than that, but that's the idea is, and I don't know why I thought of it years and years and years ago to do business that way, but about now 40 years, I've been doing deals like that. And it's just been critical to helping me build the life that I wanted. And so I decided I wanted to share that with everybody. And it is also one of the several hundred ways that you can pay for a business, right? Yeah. So it ties together with that business acquisition strategy.
So Roland, oh my gosh, we could go on for hours, and you've just got such amazing knowledge and your ability to communicate it, and the impact that you're having. It's just amazing. So I want to get you teed up for a final thought. However, before I do, how does somebody best way to get into the circle of Roland? What would you say would be the best way for somebody to begin that journey?
So it depends on what they want to do. If they're looking for content, I'm on all the socials. I put out content on YouTube and TikTok and Instagram, and we have a podcast called Business Lunch. If it's to get involved in actively doing the things we're talking about doing, I would go to epicnetwork.com, which kind of is where all of our programs and things are. We do a challenge that's free every month that we talked a little bit about. It's a 5-day challenge that teaches people how to acquire businesses with little or no money out of pocket. That's called the Epic Challenge. We also do one on consulting for equity called the Paid for Life Challenge. And those are no cost. Those are great ways to get involved. I also have books on both of those topics that are available at epicnetwork.com. So I'd say that's the easiest way to do it. And, follow me on the social, and we talk about stuff like this all the time.
Yeah, absolutely. Absolutely. Okay. So what haven't we asked you, or what haven't you shared yet that you think would be impactful for entrepreneurs, wannabe business owners who maybe want to exit? What would be your final thought?
The other concept that I don't think a lot of people think about in terms of what business will do for you is the exponential way that owning businesses that are sellable can increase your net worth. And the thing that to me is absolutely amazing about it is that if you own a business that is sellable, that's exit ready, we like to say, if you own a business that is exit ready, then you typically are going to be able to sell it relatively quickly for several years of the profit that it makes every year. So if a business is making $500,000 a year and you decide you want to sell it, the day that you get paid, you're very likely, let's be conservative, you're very likely to get $1.5 million, which would be a 3 times the $500,000 profit, to $2.5 million, which would be a 5.5. Usually we're able to get 10 plus, and there are strategies to get you there that we talk about. But the simple thought that what if you owned a few businesses, and what if you were selling one business a year at a multiple of only 5? That means that every year you're getting 5 times the profit that you would have gotten in a single year just because you're selling the business. And so it adds up pretty quickly, right? 10 years, you've got 50 years of profits without even considering compounding that you would not have had you just owned that business during that 10-year period. So I like to think in terms of hundreds of years. It's like, how many hundreds of years of profits can I earn this year? That's kind of crazy. Like 100, it's a century long. The fact that you could earn 100, you could be 100 years ahead of where you are right now, 10 years from now, is kind of crazy. And so I'll leave that to percolate, but that to me is something we didn't talk about that I think is really cool.
Well, and in that, it just, when you start thinking about that a little bit, that gives you the ability to impact others way beyond you when you start thinking at that level. So I appreciate you sharing that final thought. Well, Roland, again, thank you so much for your time. I feel blessed to be a part of the group and the mentoring that you're doing with me and the impact it's having on our organization and, the world that you're opening, not just on myself, but everybody in the group up to, because that's what it is being a part of Epic. And I'm just truly blessed to have you here today because I know how valuable your time is. So thank you.
Well, thank you. We are blessed to have you as part of our group and to be able to be on your advisory board. And thank you for having me, and anything that we can do to help at any time, just let me know.
Thanks so much. Everybody, thank you so much for tuning in to the Destination Business Freedom Podcast. We appreciate your support. Please share our episodes on your favorite podcast channel, and we look forward to talking with you soon. Take care.
Thank you for joining Destination Business Freedom with Pat Mancuso. May the insights and strategies shared guide you towards financial prosperity and personal freedom. Continue to navigate boldly. Until next time, keep transforming challenges into achievements. Farewell, and stay the course.